Hi. Well, post the announcement of the union budget, our markets have succumbed to some selling pressure, and we have seen that this selling pressure has been very sharp, specifically in many of the mid cap and the small cap names. In fact, this time in this corrective move, many of the outperformers which used to show some consolidation during market correction have also seen some corrective phases. Going ahead, we believe that markets are likely to show some consolidation phase on the lower side. Although the 200 DMA has been breached, the weekly charts indicates a rising trendline support in the range of 10,950 to 11,000 range, whereas on the higher side 10,000, 11,250 to 11,300 is the immediate resistance range. So one can expect some consolidation in the index front within this 200 to 300 points range of 11,000 to 11,300. On the other hand, the mid-cap index in today's trading session has shown some recovery after a gap down opening. And if you look at the daily chart, the lower end of today's session marks around a potential reversal zone of a harmonic pattern. Technically, whenever such ranges are tested, there used to be some pullback moves, and that's what we witnessed today. The mid-cap index have shown some pullback moves. So in next few trading sessions, certain beaten down mid-cap names can show some pullback moves. Hence, traders should watch out for this space, from a short-term trading perspective. As far as levels are concerned, even the bank Nifty index has seen some sharp correction and is now approaching its 200-day moving average. So we expect some consolidation in the banking space too. As far as stock specific ideas are concerned, as I said that the mid cap names would tend to show some pullback moves. So we have a couple of recommendations from the mid cap space. One is a buy call in Avenue Supermarts. This stock has consolidated in a range, and the prices have given a breakout above the immediate swing high around 1470 to 1480. Short-term traders can create fresh long positions, keeping stop loss below 1425 and expect target around 1550 in near term. The auto space has been shown very sharp correction since last few trading sessions, and auto as well as auto ancillaries could show some short covering move in next few days. Amongst the auto ancillary space, Exide Industry is trading at its medium to long term support. So we are expecting a pullback move. So one can go long in Exide Industries with a stop loss below 177.50 for target of 198. Amongst the private sector banking space, Kotak Bank is one stock which has been resilient to the recent correction, and in spite of the Bank Nifty index showing sharp correction, this stock has managed to show a time-wise correction within an uptrend. So we expect some Kotak Bank to show some positive momentum and resume its high degree uptrend. So one can create fresh long positions in Kotak Bank with stop loss below 1475 to 1600. However, having said that, one must keep in mind that the short-term trend still continues to remain negative, and any such pullback move should just be considered as a pullback within a short-term downtrend. So traders should be very strict with their risk management, and one should be even very quick to book profits on their long positions as well. Thank you.